Namaskar guys, this is Stock Yatra and we are looking at a series of lectures on the basics of the Indian stock market. We have completed 7 video lectures so far. We'll look at the primary market, that is the IPO market, in the 8th lecture. So here we are in the primary market. Until now we have discussed the secondary market. So the primary market, also referred to as the IPO market, is the first point of contact between a new public company, any company that is turning public for the first time, and the public. So the first time a company is turning public and wants to issue its shares to the public, it will be through an IPO. It stands for initial public offering. This IPO is unlike the secondary market. You have to apply to participate in an IPO. So you have to drop an application with the company. This application can be dropped with your broker. Every broker provides you with a feature to apply for an IPO. So this is a very easy step. It will take hardly 10 minutes max. This IPO, you have to apply for the IPO, and the allotment process will be a lottery based auction. Now, what do we mean by lottery based auction is that it has both the features of a lottery as well as an auction. Like in any auction, you have to bid for the product that is being sold. So you have to bid for the product, and whoever is the highest bidder will be awarded the auction, right? But in lottery, what happens is that lucky winners are selected and they will be awarded the product. We combine both in an IPO. For that, we'll first understand how to apply for an IPO. So the application process is that you have to mention the bid quantity. All the other details like your bank account details, Demat account details will be taken automatically by your broker. You don't have to mention them. You just have to mention the bid quantity in number of lots. As we discussed, lot size comes in play here. So you have to mention it in number of lots. Usually one lot will be worth 15,000 Indian rupees. Or sometimes this one lot can be worth 1.5 lakh Indian rupees. So these are two standard fixtures done by SEBI in order to maintain a standardization in IPO application. So one lot is usually around 15,000 rupees, Indian rupees. So the number of lots you have to mention in bid quantity. You have to mention a bid price. The company that is going public for the first time, like we saw Stock Yatra, once it turns into a public limited company, it issues the shares in an IPO. Like any share has a share price, this IPO will have a share price too, and this will usually be in a price range. For example, 450 to 455 rupees. Sorry, 455 rupees. Right? Now this price range, it provides a lower limit and an upper limit, and your bidding price has to fall within the price range. So you can apply at 450 rupees, you can apply at 451 rupees, you can apply at 455 rupees also. The upper limit is called the cutoff price. So upper limit will be called the cutoff price. like any auction where the highest bidder is awarded the product, even here the person who bids for the upper limit will be given first priority in lottery, and the lower limit will be given the least priority, and in a descending order anywhere between that will be given priority according to whatever price you set. So in order to get higher chances of being allotted an IPO, you have to select the cutoff price. This is a common practice. So you have to mention the bid quantity in number of lots, you have to mention the bid price, and you have to mention a payment detail. This payment detail you can mention your UPI ID of Google Pay, Paytm or PhonePe, any UPI ID, and you have to place the application or submit the application. This IPO application has to be submitted between the start date and end date. Beyond the end date, you cannot apply for the IPOs, and you can modify the IPO application n number of times. You can change the bid quantity, you can change the bid price between the start and end dates. After this, what happens is it will be sorted based on the bid price. Higher the cutoff price bids will be given higher priority, and after sorting this will go to a lottery software where based on the priority applications are selected based on lottery. Applications are selected based on lottery. After selection, the applications or the applicants are rewarded the IPO shares. So it's a lottery based auction system where highest bidders are given priority to participate in the lottery, and based on pure luck, IPOs are allotted to applicants. To increase your chances of obtaining an IPO share, you have to select the cutoff price, right? And payment is via an autopay mandate. So autopay mandate is like you have to enter your UPI pin in advance. This also has to be done before the IPO end date. Before the IPO end date, 5 p.m., you have to approve your autopay mandate. You have to log into your Google Pay account or any UPI account that you have mentioned, and it will ask to block 15,000 Indian rupees, or based on the number of lots, 30,000, 45,000 multiples. Based on that, it will ask you to block certain amount for autopay. In case of allotment to you, this 15,000 will directly go to the company automatically. You don't have to authorize it again. This is what is called an autopay system. If you are not allotted, this 15,000 will be unblocked in your bank account. So don't forget to authorize your autopay mandate after submitting your IPO applications. Otherwise, your IPO will be rejected even if you are allotted on the lottery system, right? Now, how to assess if an IPO is going to render you profits or losses? For that, we will look at two terms: the subscription and gray market price. Subscription is the number of applications or number of lots applied for as against the total number of lots available. Number of lots applied for versus the total number of available lots. That will show you the subscription status. So if there's a 100% subscription and there is 10 lakh lots available, it means that all 10 lakh lots have been bid for. If it is a 200% subscription, there are 20 lakh lots being bid for, of which only 10 lakh lots will be allotted. So only 100% of the applications will be selected in lottery. So below 100%, below 100% subscription, everybody gets the IPO shares irrespective of luck. But once the subscription crosses 100%, it is allotted based on lottery, right? This is what we call the subscription basis. And you can assess the demand based on the subscription status. If the subscription is very high, let us say the IPO has been subscribed 5 times, 5x, it means that there is 5 times more demand than what is available. So once the IPO is allotted and it is listed on the stock market, there will be an increase in the stock price and you are bound to make profits. But let us say the IPO is not very popular and it has been subscribed only 0.5 times, which means that the demand is low and the stock is going to get listed below the IPO price and you are bound to make losses. The other way to assess an IPO is by its gray market price. So gray market is a market where IPO applications can be sold. So these applications have a limit. One Demat account can submit only one application and maximum 3 bids can be made via one application. So because of this limit, many people who want to grab very good valued IPOs, they tend to buy applications from other people at a premium price, at something more than 15,000 per lot. So they buy it at a premium price. This is what is called the gray market or GMP premium. Higher the premium, if this is the IPO price, higher the premium, higher will be the listing price. If this is GMP of, let us say, 10 rupees, the listing price will be here. For a GMP of 22 rupees, the listing price will be a bit more higher. So this is how you assess the demand of the IPOs and enter into good performing IPOs. The advantage with IPOs is that 80% of IPOs perform well, so they are listed above the IPO price and you get a minimum of 10 to 20% returns in just a span of 1 week, maximum 10 days, right? This is the advantage of IPOs. That's it for video 8, guys. So we'll be looking at indices and derivatives markets in the next section. Stay tuned. Like, share and subscribe to Stock Yatra and hit the bell icon to not miss any updates. Thank you. Jai Hind.